Nifty has registered an all-time high of 13,280 and it closed at 13,258, a fresh breakout. A breakout from a parent has taken place in Bank Nifty. From here, where? Will the breakout sustain? Will it move up or it may sudden falter down? Let's see. Welcome to the weekend review of week beginning 7th of December 2020. For disclaimer, please refer to my website chartvideo.com/disclaimer. After the bearish engulfing pattern on 25th was formed, well, thereafter the next day's low was never violated. Instead, it closed higher and on Friday registered a new high. As of now, if we go by the trend, by all means, all the three trends are up. The primary is up, so is the intermediate and short-term trend. One should keep in mind that any correction should not take Nifty below the bearish engulfing pattern high, which is at 13,145. In case Nifty manages to stay above the 13,145 level, we can safely say that the uptrend is on. As I had mentioned earlier, that whenever market moves at all-time high, the round numbers are the levels which one should watch out for resistances as well as Fibonacci retracement levels. If we take a Fibonacci retracement of this particular downside swing, the 261% retracement comes to around 13,432. It is to be kept in mind that Fibonacci retracements are just levels. It does not say anything about the strength of the trend or the probability of the stock price moving there. But once it reaches there, you may expect some halt in the trend. Going by the moving averages, well, the 13 SMA certainly is the guardian of this particular trend. Let's see if we get the support in coming days or not. Let's go to the indicators that might give us a good idea. On the daily charts of Nifty, RSI is in overbought area and is exhibiting negative divergence. By all means, I had told you earlier that this type of movement does take place towards the end of the trend when RSI shoots above all the previous levels and enters into the overbought area. This can be taken as a divergence trap, but by any means, one should not go short just by looking at the divergence. The trend on the upside along with the RSI may continue for a while, but as long as it does, well, we should respect the trend. The ADX has flattened itself out. That's all. It is not giving us any signals which makes us worrying. All the same, it's just saying that, well, we are at elevated levels, nothing more. In Nifty 1 month future in hourly charts, if we look at the RSI, well, just taking this trend, it seems everything is okay. Much more than that, we have got a rising trend line in this particular RSI. This particular trend line should be closely watched out for. If the trend is to remain intact, the indicators should stay above the trend. In case any failure comes up, in case the trend line is violated, in that time the course of the market might change. Till it happens, well, I would say it all is okay. The hourly ADX, after remaining flat for a considerable period of time, has started moving up again and presently is at 27 odd levels, certainly indicating that the trend is healthy. As I've often told you earlier, ADX in 15-minute chart often gives you very good positional trades. In this case, the PDI has crossed the opposite peak of MDI and has just moved above it. This signals that the momentum on the upside might continue or buy on dips policy should be taken. The ADX, which was moving down, has started moving up again. If this combination continues, that is, PDI stays above the MDI and ADX continues to move up, then the trend is certainly healthy for short-term swing traders. Mind it, we are seeing Nifty future on a 15-minute time frame where we do get good trading opportunities for 1 to 1.5 days time span. The U-turn in ADX should also be noticed. Moving on to the derivative segment, well, put call ratio is right now playing between 1.28 on the downside to 728 on the downside to 1.665 on the upside. Nothing special to say. I would say it this way, well, it is okay. In case the put call ratio moves below 1.27 or 25 odd levels, that would be a cause of worry, because the strength or the buoyancy which it was showing in put call ratio is no longer visible at this moment. But all the same, during a bull market, this is just normal. It does stay at a elevated level, saturates itself at around 1.6 odd level, stays there for a considerable time, and in between the index may continue to move up. Warning of this will come in case put call ratio moves below 1.28. Time for a break, time for something which I have got commercial interest. Demystifying Candlesticks, a comprehensive course on Japanese candlesticks. It consists of 2 videos, the first one devoted to nomenclature and examples of same in the stocks and indices. The second video covers blended candles in details with examples of how it can be used effectively by traders. Thorough discussion on gaps and windows has been done for traders to get that extra short. Candlestick rules in support resistance have been discussed along with examples where trading opportunity arises. Candlesticks have been combined with trend lines, moving averages, RSI and ADX to sharpen and plan trading strategies. Do enroll and get started instantly to enrich yourself by demystifying candlesticks from the comfort of home at an extremely reasonable price. Welcome back. In open interest interpretation, if we segregate the movement of Nifty into 2 slabs, what we are getting is there was a time period where there was no increase in open interest. Thereafter, certain increase came up and the increase seems to be continuing. During this period, Nifty has moved from 13,000 odd levels to 13,300 levels. We can say it this way, Nifty is moving up with increase in open interest. A small brief discussion on Bank Nifty. Well, it's certainly not at an all-time high, but Friday's movement was quite a strong one and virtually just tested the previous high. By all means, in doing so, it appears that it has broken out of a pennant. The formation of this particular breakout will be confirmed when it moves above the previous high, that is around 30,200. Once 30,200 is taken out, we can expect further movement on the upside. In Bank Nifty, the 13-day SMA is giving perfect support to the movement. Well, I would be checking out this particular SMA. In case we have a close below this 13 SMA, we would say it this way, that the uptrend is no longer intact. Till the index stays above the 13 SMA, we should consider the movement to be on the upside. Almost the same formation, just like Nifty in ADX as well as RSI. The RSI is exhibiting negative divergence, but all the same, as I told you, till the trend reverses, we should go along with the trend. The divergences may stay there for few more days. ADX has flattened itself out. Just saying the same, it is at elevated level, nothing more, nothing less. The hourly chart is quite interesting in Bank Nifty. First, the RSI. RSI is trying to move above and it is presently placed at 64 along with the trend. I would say it certainly healthy. Well, the most interesting aspect is the ADX, which I had tweeted previous week also. A clear divergence is being observed in this particular index. ADX currently is at 17, which is in slightly rising mode, but above 20, the trending move may take place. And whenever ADX divergence takes place, what you should be doing is wait for the ADX to move up, safer if it moves above 20, and then in that case, go with the dominant DMI thereafter. Under the present scenario, the PDI has crossed the opposite peak of MDI, which is signaling that the uptrend may continue. By all means, since the breakout from a flag has taken place, flag or pennant or whatever way you call it, I would say it this way, the Bank Nifty should not fall into the flag. That would be taken as a warning sign. One may consider this particular level as the stop loss level or the 13 SMA as the stop loss level for positional trades. Well, the signals for Nifty and Bank Nifty both are up. Uncertainty is the name of market. So please have a stop loss and ride the trend. The trend as of now is up. So much so for this week. See you again next week.